Dollar cost averaging is a serious strategy that works time and time again. And these opportunities allow you to really get your entry down on the names that you love. Cuts make debt cheaper, not just for the government, but also for you and I. One of his biggest objectives is to fix America's budget because we have a 123% debt to income ratio. What is going on, Bullish and Beyond community? This is a solemn period of time, and I thought me, Jake, JT knows things, JT, whatever you want to call me, would come at you and talk about the craziness that's going on here. The S&P 500 literally in 1 week wiped out all of 2024 gains. We are back to January of 2024, almost 25% from the top. That is one of the worst corrections that has occurred in stock market history. It's worse than the COVID crash, for those who do not know. So this is crazy. Now, this is not financial advice, but I do think this is exactly when you make your money. These are opportunities that the market gives us. You have to maintain that perspective. If you're in stocks you think will not be here for the next 10 years, then you're doing it wrong, right? Or cryptos, right? We got to go long term. And right now, they're selling at one hell of a discount. You might be able to rewind time 3 years buying some of these assets, which is just one of the best opportunities. I mean, you could have waited for years and never seen something like this, right? So it's a great opportunity, and we want to really talk about what all of this means and what's going on. Okay, so we talked about in the latest episode, we talked a little bit about the tariffs, but I really felt like it needs a deep dive from someone who has studied macroeconomics for a long time now. And I wanted to bring it high level as best as I can to you guys. These are very complex things, but really what's happening is we have Trump in office. Trump's one of his biggest objectives is to fix America's budget because we have a 123% debt to income ratio. That means we spend 23% more than we make. The tariffs are a way, a summary would be to increase the revenue of the country. Okay, we make more money so we can close that gap. Okay, now that's good in theory, but the stock market's responding to these tariffs negatively because in the short term, every single piece of their supply chain is going to be more expensive to the tune of whatever the tariff amount is, plus everyone getting a little bit of extra margin off that increase anyways. Oh, it's the tariffs. I'll just sneak in 2%, 3%, 5%. You do that 4 or 5 times from China to the harbor to, the wholesaler to the distributor, it starts really adding up. So prices are going to go higher, much higher. Tariffs are inflationary. But that also means we're going to have higher asset prices. Prices are going to go up over time. So if your stuff's going to be here for a long time, that's why I think these are some of the best opportunities to buy because things are just going to go up like they always have. It might get cheaper. It might go lower from here. I don't know. But I would buy all the way down. And I will with my investor's capital. That's called dollar cost averaging. Okay, it's where, let's say you have $1,000 and you want to buy Bitcoin. It's at 82,000 right now. If you think that's a fair value, because you're getting it about $7,000, $8,000 cheaper than what miners make it for. So, I mean, that is a fair value, theoretically. You would buy it with maybe or we'll just divide it by 5. So $200. Wait. If it goes to 90, you're making money. You're great. And then when it comes back down, boom, it's at 81.5. Or if it goes to 78, 76, there's another 200. There's another 200. There's another 200. Wait till you have another 1,000 up, and then you just find these little pockets to keep your entry low because in the long term, If the prices are going to be higher on what you're investing in, your profit, your return will be higher. You know, if I bought Bitcoin at 82, then I bought it all the way down to 50, my average might be 66 versus putting it all in at 82 and feeling awful. So now I bought, you know, one Bitcoin for 66, let's say, and it's at 250. The difference of 82 and 66 from when I bought it is a lot when it's trading at 250. That could add another 40, 50% to your returns. So dollar cost averaging is a serious strategy that works time and time again. And these opportunities allow you to really, really, really get your entry down on the names that you love. If nothing has fundamentally changed, your conviction and your thesis, the prices are making you emotional. And that's just something that as investors we have to really power through. Um, okay, so that's the market. Now let's get into the cuts. So I'm sorry, not the cuts, the tariffs. Trump is basically making everyone's need more dollars, right? Because let's say it cost me 37% more dollars to send 10 billion of oil to America or phones. It doesn't really matter. You're going to need to buy more T-bills to collateralize those dollars. So Trump's focus is just getting the T-bill yields up to make everyone feel nice and warm, up from 3.8 to hopefully 5%, I think would be his goal. There's another vector. So we have dollars are going to be exported at a greater clip because, you know, they need more dollars to pay the tariffs. Okay. And on the other hand, internally, you know, remember his only objective is to fix the budget. Internally in America, right? We have this massive debt gap, and about 6 trillion of it is going to get basically refinanced in the coming months. Trump needs cuts to get our interest payments on the debt down because we pay central banks interest, right, for the money that we need. And we basically take loans against our GDP. I mean, we use our GDP as our balance sheet to get loans from the central bank, and then we pay whatever rate they control, which is why Trump has to play this game instead of just saying we're cutting rates. He doesn't have any control over it. It's just Jerome Powell and the Fed. So he needs to get what their interest payments will be lower. So it's over $1 trillion now. He needs that to get lower to help our deficit. He needs more revenue to come in to help our deficit. It's all about helping our deficit. That is a environment where debt instruments will likely be the focus. So equities could see a further decline. We really could. And because that's his sole focus of getting the debt up, because we need to get these dollars handled. We need to deal with them. Got 20-something% more than we need. And we need big customers. We need trillions and trillions and trillions of buyers of our dollars. Essentially, we're putting them to productive use in trade. So I think what he's doing is he's focusing on those things and using the stock market to manipulate Powell to put cuts in. If Powell cuts, that should recover the market a little bit. We should pull out a little bit. I don't know if he's going to do it though. I really don't. And this is important. If Powell doesn't do an emergency cut after one of the worst weeks in stock market's history, that would mean that he is worried about worse things, right? Because think about it this way. Cuts make debt cheaper, not just for the government, but also for you and I. So when the debt gets cheaper, you and I would be more willing to take risks. Like, okay, let's say I have $100,000 of equity in my home. It costs me 5%. That's 5,000 a year in interest for $100,000. Or if it costs 10%, that's $10,000 of interest a year, right? For that $100,000. So it's going to cost you double if rates are 10%. And, as that's all called the cost of capital. So when the cost of capital is low, people feel better taking risk because they can get lower returns and still be profitable. They don't have to take as extreme of risk. As cost of capital goes up, right? That's why the stock market is so, in my opinion, so speculative and up and down and crazy. Same with crypto. Everyone just needs returns. They feel pressured to get returns. Either way. So if Powell won't cut after this, that means he is worried about running out of ammo, right? We're at 375. If he cuts down to 2%, 1%, right, that's crazy. And the market keeps going down. It's almost like you got a revolver and you're on shot 3 or 4. I mean, the second we hit 0% rates and the market's not roaring back up, right? That could be a Japanese situation. Japan in the 80s was a force. Then they had their rates to zero. They let their economy grow too fast. They didn't stifle it like we do here by increasing rates as the market gets too hot. And they entered this state of stagflation where they can't stimulate the economy and it's not growing anymore. It's a really bad place to be. And I think Powell is scared of that if he doesn't cut because of the stock market crash that we're seeing right now. And I think Trump is playing chess, trying to manipulate Powell to get him to do the cuts to help with the refinancing of the debt. I don't think he cares about anything else. Yes, stock market can recover. Most of his stuff's in real estate, so the debt game is really going to help him too. It aligns his businesses, his interests, all of his friends' businesses and interests. If you're investing in businesses, tariffs hurt, but in hard assets, they do not, like commodities or um, real estate or crypto, in theory. It'll be interesting to see how this all plays out. This very well could lead to the decoupling. I really don't know. The second order consequences of it you know, all of this stuff, it all results in money printing. It has to. It absolutely has to. Because, I mean, think about it. You are having people pay more for goods and more in trade. That's inflationary. That's going to put basically more dollars into everyone's pockets and increase the GDP over time, which would allow us to borrow more money, which is printing more money. So, really, I don't see a scenario where commodities and hard assets don't do well. I think equities are going to struggle for a period of time to stabilize. And I don't think tariffs are going to go anywhere. He has been on record saying that basically all these IRS agents, they're going to work for the ERS if we're going to hire them, or they're going to walk the border, or they're not getting hired. Those are the options. We're not hiring any more IRS agents. In fact, we're cutting IRS agents. Like, this guy wants to do tax cuts. He wants to put the burden of the revenue of the country on other countries, and he does not want to go into our pocketbooks. And I, as a libertarian, I love that. But I really don't think tariffs are going anywhere. And I think equity is going to take a while to shake all this out. I think with all the regulations that are going on in crypto that, I think Bitcoin will do very well. Berkshire Hathaway even said if a treasury is stood up for Bitcoin, like a United States Bitcoin holdings, he's going to buy Bitcoin. If Warren Buffett buys Bitcoin, watch out. Pretty crazy. I don't know. Let me know what you guys think. I try to bring you my best thoughts and analysis each week and on the channel and everything else. And I really just see this being positive for parts of the market and really, really hard for a lot of other parts. And I think that this is a reality we're going to have to deal with for a while. And I would really take a look. I would be paying very close attention to what Powell says and does, and I will be. But I recommend that because if he's staring into a 25% downturn and basically, okay, it's 2 weeks. I'm being a little dramatic, but in 2 weeks, and he's not going to cut, I don't know. I think he's worried about way worse stuff. And if it gets that bad, businesses are going to need bailed out. That's money printing. Banks might go insolvent. That's money printing. Basically, every consequence of any of this is money printing, and that all helps hard assets. And um, people are going to be looking for a hedge against that. So, my money's on Bitcoin. This is not financial advice ever. You guys let me know what you think. Until next time, take care of one another. This was JT Knows Things, another bullish moment for Bullish and Beyond. Remember, buy low, sell high. When in doubt, zoom out. These are one of the best opportunities in your lifetime. Don't fuck it up. Cheers.